Yes. Today we are going to discuss about the goodwill treatment in case of admission of a partner. So what is the accounting treatment and what are the journal entries are needed at the time of admission of a partner should be discussed now. Yes. As for the section 10, sorry, as for the accounting standard 10, we shall record goodwill in the books only when some consideration in money or money's worth has been paid for it. Only we have to record the transactions in the books of accounts when it is received, that goodwill is received or assessed in terms of money. Otherwise, we should not record it. Simply, we have to leave it. So, some consideration in money or money's worth has been paid for it. It also says that in case of admission of a partner, retirement or death of a partner, goodwill should not be raised in books of the firm. Only at the time of admission, these changes can be done. But at the time of retirement of a partner, or death of a partner, the goodwill should not be raised. That should be as it is. If the goodwill is in the books of accounts, yes, that should be finalized, and that accounting procedure should be made according to the that at the time of retirement or the death of the partner. But and that goodwill should not be raised only at the time of admission. As for the consensus or agreement of the partners, the goodwill can be raised, can be reduced, whatever the thing it may be. Now, accounting treatment of goodwill in case of admission of a partner. The incoming partner brings in some amount as his share of goodwill or premium to compensate the existing partners for the loss of their share in the future profits of the firm. Goodwill is brought by the new partner to compensate the profit to the existing partners. Yes. So, if the new partner joins in the firm, generally the profit portion will go down. For that purpose, generally, the new partner brings the goodwill or premium. So, the incoming partner brings in some amount as his share of goodwill or premium to compensate the existing partners for the loss of their share in future profits, not the present or previous, but the compensation regarding the future profits, not the present or regarding the previous years. Thus, at the time of admission of your partner, there are following two ways of treatment of goodwill. There are two ways, two methods of treatment of goodwill. Yes. One is premium method. Under this method, when the incoming partner brings his share of goodwill, under this method, when the incoming partner brings his share of goodwill in cash, the existing partners share it in the sacrificing ratio. Yes, they share the amount which is brought by the new partner is to be shared by the old partners in sacrificing ratio. However, when the amount of goodwill is paid privately, it's the most important thing. It is the most important thing. When the amount of goodwill is paid privately by the new partner to the old partners, to the previous partners, up to the existing partners, in cash or anything else, it is paid cash or equivalent to cash privately. No entry is passed in the books of the firm. So, the settlement of goodwill is done either in the form of cash or in the form of equivalent to cash privately. Then we should not make any entry regarding this aspect in the books of the firm. Maybe it may be in the form of cash, but it is paid privately, so it should not be recorded in the books of firm. Now let us see. Goodwill does not appear in the books. Goodwill does not appear in the books. First one. Yes. Till today, or that means when the new partner joins in the firm, if there is no goodwill, if there is no goodwill in the books of accounts of the firm, the entries are in the following way. The new partner brings goodwill in cash. Previously, we don't have any goodwill. First time, the new partner is bringing the goodwill. For that, the entry is, if the new partner brings the goodwill in cash, cash account data to goodwill account. Cash account data to goodwill account is the entry. The narration is being the share of goodwill of new partner brought in cash, or being the goodwill is brought by the new partner in the form of cash, or being the goodwill is brought by the new partner. What are the things? So that meaning should be reflected in the narration. Goodwill is brought in the form of cash by the new partner. Yes. Now, let us move for the second entry. Old partners distribute the goodwill. After bringing the goodwill by the new partner, generally, old partners distribute the goodwill. Distribute the goodwill. So goodwill account data to all partners' capital accounts individually. For example, if there are Ramu capital account, Ramesh capital account, if there are two partners, Ramu and Ramesh, to Ramu capital account, to Ramesh capital account, like that. Not the new one, only the previous existing partners or old partners. So goodwill account data to all partners, capital accounts. Yes. Being goodwill distributed among the all partners in their sacrificing ratio. Yes. It should be recorded as per the sacrificing ratio of the all partners. Yes. So here we have to see that goodwill is brought by the new partner and the goodwill is distributed among the all partners. Yes. So once the goodwill is credited and in the second entry the goodwill is debited, what happens? Goodwill is cancelled. So in the balance sheet of this firm, after entering the new partner into the firm, goodwill does not exist. That's what we have seen in this. Goodwill does not appear in the books. This is the first one. So goodwill is brought in the form of cash, and the cash, the goodwill, that goodwill is distributed among the old partners. So goodwill is cancelled. So this goodwill does not appear in the balance sheet, in the books of accounts. Now, let us go for next one. Alternatively, we can credit the share of goodwill that the new partner brings in cash to the new partner's capital account and then adjust existing partners' capital accounts in their sacrificing ratio. Yes. See, once again, alternatively, we can credit the share of goodwill that the new partner brings in cash to the new partner's capital accounts. So now we shall see the journal entries. See, the new partner brings goodwill in cash. Yes, goodwill in cash. Cash account data to new partner's capitals account, being amount brought by the new partner for a share of goodwill. Yes. How much? Some amount, whatever the amount prescribed in the problem, mentioned in the problem. Cash account data to new partner's capital account. Yes. Later, the new partner, in the above entry, new partner's capital account is credited, and the below entry, new partner's capital account is debited. So that from the new partner's capital account, the amount is adjusted to the existing partner's capital accounts, that is individually. So new partner's capital accounts that are to existing partners' accounts are old partners' capital accounts. Narration is being goodwill brought by new partner distributed among the existing partners in their sacrificing ratio. This is the alternate method. Okay, this is the alternate method. Now the amount is in the form. And the last entry, we should see very carefully that, see, if the whole partners withdraw goodwill, this is the most important one. If the whole partners withdraw the goodwill from the firm. So whole partners capital accounts that are to cash account. So these partners, whole partners, or withdrawing the amount in the form of cash from the firm. That is the consensus. That is the consensus as they withdraw the amount as per the consensus between the partners. Agreement or discussions among the partners so that the decision will be taken by them. So if they decided to withdraw the amount from the firm by the whole partners, the entry is existing partners capital accounts that are to cash account. Yes, being the amount of goodwill is withdrawn from the firm by the old partners. By the old partners. Now we shall move to the another one. When goodwill already exists in the books, already exists, some amount of goodwill is already existed, if it is existed in the books, and what is the accounting procedure is to be seen now, is to be discussed now. Yes. See, goodwill not appear in the future, not appear in books in future. That is okay. It is already existed. So what should we do? Is the thing we have to be discussed. Yes. Right of old goodwill. That is the most important. When the new partner enters, admits. When the new partner is admitted by the old partners. Yes. Right of the old goodwill first thing. Because if it is put as it is, what happens? The new partner will be entitled in future in that goodwill, in that old goodwill. So we have to write off the old goodwill, and that should be distributed among the old partners. So entry is old partners capital account that are to goodwill account. Old goodwill, it should be, we should be very careful. It is only regarding the old goodwill. If any old goodwill exists, that should be distributed among the old partners as per the old ratio. Yes, entry narration is being old goodwill written off. Yes. Okay. New partner brings goodwill in cash. Next one. Already old one is distributed. It is cancelled because it was distributed. So it doesn't exist in the books. And now new partner brings goodwill in cash. In the form of cash, it is brought by the new partner. So goodwill entry is cash account data to goodwill account. First thing. So as soon as the goodwill is brought in the form of cash, generally that goodwill is distributed among the whole partners. See the entry. See the entry. First one, cash account data to goodwill account. The next one, goodwill account data to all partners, capital accounts individually. If there are 10 partners, should distribute to the 10 according to their ratio. So goodwill account data to all partners, capital account. Being all partners distribute goodwill. Now, goodwill continues to appear in the books. Yes, this is another one. If the goodwill continues to appear in the books, if it is decided to continue it in the books, what is the accounting procedure? Have to be discussed. Is to be discussed. Yes. When the partners decide that goodwill continues to appear in the books, the new partner will bring his proportionate share of goodwill only in respect of the difference between the new value and the book value. All the journal entries in this respect are the same. Okay, that's okay. Now, we shall see revaluation method. Earlier, premium method we have seen. Second method is revaluation. We use this method when the new partner decides not to bring his share of goodwill in cash. In this method, the new partner does not bring, or the new partners do not bring. If the new partners are 2 or 3, they don't bring the goodwill in form of cash. Thus, we need to raise the goodwill account in the books by debiting goodwill account and crediting all partners' capital accounts in the whole profit sharing ratio. What should we do? We have to create the goodwill. We have to revaluate. This means goodwill is valuated. Already it is existed. It is valuated. We need to raise goodwill account in the books by debiting goodwill account and crediting the whole partners' capital accounts in the whole profit sharing ratio. Yes. To create, first one, to distribute to the all partners. Yes. Entries are, see, goodwill does not appear in the books. First entry, raising, that should not appear in the books. Goodwill does not appear in the books. For that one, goodwill account data to all partners capital account. It is created, raised. Goodwill is created. Goodwill account data, full amount should be mentioned to all partners account. It is created, so goodwill account data to all partners account, being goodwill raised to the full value in the whole ratio. Yes. Now it is created. Now we have seen that goodwill does not appear in the books. So for that, goodwill does not appear in the books. Is there any goodwill appeared in the books? No. But now it is created. Now it is created. So for that creation, we have made entry. And when goodwill already exists in the books, second method, when the goodwill already exists in the books, so first we have to distribute that goodwill among the partners. Goodwill account data to all partners capital account. Yes. Goodwill account data to all partners capital account. So being goodwill raised to its agreed value. Now agreed value is, yes, it is there are two important things. In the above entry, it is freshly created, newly created. This is raising goodwill. This is created. And in this, in the first method, there is no goodwill earlier. It is assessed now and made entry. Next. In this, goodwill is already existed. But whether it is less or more is an important thing. If it is less, what should we do? If it is more, what should we do? Yes, first one. If the goodwill already existed is more than the present value, goodwill is more in the books. For example, in the books there is 1 lakh goodwill, but now it is decided by the partners goodwill is 60,000. So 40,000 is more. That more goodwill should be distributed among the partners. Goodwill accounted are to all partners, capital accounts individually in whole ratio, being goodwill raised to its agreed value. Yes, it is raised, raised. And if the goodwill is less, what happens? Agreed value of goodwill is less than all partners capital account that are to goodwill account. Yes, these two things we have seen. And the last one is most important one. See carefully. See carefully. Writing of goodwill. Writing of goodwill. So here we are cancelling the goodwill, so that after writing the goodwill does not appear in the books of accounts. So in such situations, most of the students are confused. So created and cancelled. In such situations, see, all partners capital accounts, it is writing off, created and written off. So in such situation, we should debit all partners, including the new partner, as for the new ratio. As for the new ratio, including all the partners, we should debit and credit the goodwill. Whenever we want to written off the goodwill, after creation of the goodwill, in such situations, all partners capital account debt are to goodwill account, being goodwill written off. Yes. Now we shall move and discuss with an example. Yes, it will be most, it can be understood by you very easily. It's a solved example. A and B are partners in a firm, Z Enterprises. Z entered, not enterprises, is a spelling mistake. Z entered with an equal share of profit and capital of 1,20,000 each. They decide to, sorry, here one mistake is crept. One mistake is crept. Yes, it is the Z Enterprises, A, B are the partners, and C entered. They decide to admit C as their new partner for an equal share admission of partner. The value of the goodwill in the firm's books of accounts is 60. Now the goodwill value is 60. Okay, this is the most important thing. C brings 20,000 as his share of goodwill in cash. Present value is 60,000. It is in the books. And now C brings 20,000 as his share of goodwill in cash. The partners decide that goodwill will not appear in the books in future. Yes. Partners decided that goodwill should not be appeared in the books in future. Pass the necessary general entries. Yes. I think you have understood the problem. So most important thing is previous goodwill is 60,000. Now C brings 20,000 goodwill in form of cash. Yes, let's move. First entry. World goodwill should be distributed among the world partners. Listen carefully. World goodwill is 60,000. That is belonged to the world partners. That goodwill is owned by the world partners. So that should be distributed among the world partners. First entry. A's capital account debtor 30,000. B's capital account debtor to goodwill account 30,000, 30,000, 60,000. This goodwill, this reputation is earned by the old one. So that should be distributed. It's clear. It is written off. Old goodwill is written off. Now, cash, the new partner brings cash. So cash account debtor to goodwill account 20,000, 20,000. Now that goodwill should be here. Goodwill should not be appeared in the books. It is clearly mentioned. See in the problem. C brings 20,000 has his share of goodwill in cash. The partners decide that goodwill will not appear in the books in future. So 20,000 is brought. First old goodwill is distributed. That's okay, clear. The 20,000 is brought by the new one. That should be distributed first thing. Cash account debtor to goodwill account. So goodwill is credited. And goodwill account debtor to A's capital account, B's capital account. So that this goodwill is merged in the capital accounts. This goodwill is merged in the capital accounts of the old partners. So goodwill once is debited, then credited. So goodwill account will not appear in the books. So I think with this, I expect that you have understood different methods of goodwill accounting when a partner admits or enters or joins in a partnership firm. Thank you.